that's a structural issue that's going to take years to resolve. And because of that, I agree with you that yes, this mining cycle for stocks could be much bigger, much longer, especially given that we're just getting started.
Welcome back to Metals and Miners. I'm your host, Gary Bohm, and today we're diving deep into the dynamic world of precious metals, mining, and market opportunities. I'm thrilled to introduce Jeff Clark, founder of the Gold Advisor and author of Paydirt. With his sharp insights and decades of expertise in the gold and resource sector, Jeff has become a trusted voice for investors navigating the complexities of the metals market. Jeff, it's an honor to have you back on Metals and Miners. Welcome to the show.
Great. Thanks for having me back, Gary. I guess I owe you $20 for that real nice intro there. So.
Hey, I thought we settled on 30. All right.
Yeah, because of inflation. That's right.
All right. All right. So, Jeff, today's current mining investors, they're excited for this last year's results. Up on average about 80% for the GDX, GDXJ, but they're still jaded from the previous year's price action. Metals prices are up while mining stock valuations, they're still significantly lagging. Many see it as a gift, but also don't have the stomach for the massive volatility. They're leery of potential market or economic crashes that could take place, and what either of those could do to the mining stocks. What will those tuning in, or what do you hope for those tuning into our conversation today to walk away with after listening to our conversation?
Buy mining stocks. You need to buy them, especially the juniors. Many are still undervalued despite having doubled and tripled or more year to date. This is the time to speculate because we do have a confirmed bull market. Not only that, the bull market is still very young, especially for the miners. It only started this year, so we've got years to go.
Wonderful. That's exciting. All right. So there is a cluster of signals that are saying or pointing to the general stock markets being due for a decent sized pullback. Could be 7%, 17%, even 30%. It's the type of environment where something unexpected can happen. If there is a significant market pullback, how do you suspect or expect that the metals and the miners are going to react in that environment?
It depends on what type of pullback there is in the general market. So if there's an outright crash, then everything goes down, including gold, including the miners, like we had in 2008, like we had in 2020. I don't know if that happens. I got tired of trying to make predictions and frequently being wrong, like most people are about this stuff. You know, the most reliable indicator of a recession back in 2021, 2022 was an inversion of the yield curve. It happened, and here we are, no recession years later. So I got tired of trying to predict all that stuff. Um, what I do, Gary, is I make sure I am long because we are in a confirmed bull market. But I also have, I keep a pretty healthy cash balance as well in case there is a crash and everything does pull back. If the market doesn't crash and it just goes into a bear market or it's flat or companies aren't making big earnings or there's no new, flavor of the day stock, like Nvidia. If all that just kind of goes away or that's what happens, then I don't think gold and silver and the mining stocks really crash. They might do the opposite. Gold usually rises in recessions. Gold has risen during stock market crashes many times. So I don't worry about it. I make sure I have plenty of gold. I'm satisfied with the amount of gold that I own and have stored. And I'm definitely long mining stocks. But I also have cash in case something extreme happens like that.
Yeah, it's a great answer. And so, you're not the only one that's pointing to a greater confidence in the miners. Obviously, the metal's holding up, but in the miners, in the event that the market goes sideways or goes down, 5, 10, 15%, that is something that a lot of the retail investors, I think, worry about because of past experiences. But a lot of the folks that we were having coming on the show, they're not singing the same tune as the retail investors. They're actually feeling quite bullish over the miners at this moment.
That's very true. All you have to do is look at the financings that are taking place in the junior market right now. Not only are there more financings, the amount invested in each financing has spiked dramatically. A year ago, you'd have a hard time raising $1 million or $2 million, depending on the size of your company. Now you're getting five, eight, 10. A company today came out with news of 8 million from just two investors. So that's another signal that there's a lot of confidence from institutional investors, fund managers, bank analysts, high net worth investors to jump into this market. So we as retail investors need to take that lead. We need to follow that lead. It's a green light. They're investing heavily. If you want to speculate, this is definitely the time to do it.
That's great information. Yeah. All right. So gold hit a record high on April 17th of this year. Since then, the price has slipped about 2%. In fact, it may actually have crossed over today, back into high territory. I'm not sure. However, since that date, the GDX has risen by between 20 and 30%. After years of lagging the metal, the miners are finally leading. What does this indicate to you?
Uh, that's a good point, and to the point I made at the outset there, gold has been in a bull market since, in my opinion, leap year day of last year. So about a year and a half now. But the miners didn't respond until this year. In fact, this time last year, gold was still running and the miners weren't really moving. So a lot of us were wondering what the heck is going on? Why aren't the miners moving when gold is spiking and making record highs all the time? It was puzzling. And some people said, well, that means it's not a bull market and you need to get out of the miners. Well, I did the opposite personally. I've been investing pretty aggressively here over the past year, especially this year. So when the miners started to move was not until this year. So the bull market in the mining stocks is very young. It's not even a year old yet. So we do have years to go, and I think that's the message, the takeaway for now.
Yeah, I would agree with that. In fact, I was doing some research for an upcoming Substack article that I'm going to be sharing. And April 7th, which was the height of the tariff fears that there was going to be a recession because of the tariffs,
Yeah.
my my miner only portfolio bottomed out. Since then, since April 7th, it's up 60%. And so
That's great. Congratulations. And to your point, gold has pretty much gone sideways since that date. May sell may and go away, but the miners have not. The miners have done very well. So
very well.
now you have to buy on dips. You can't chase things higher. You must buy when there are pullbacks. And there always will be pullbacks, even in bull markets, even in manias, there are pullbacks. So make sure that's what you do if you're buying.
Is this a bull market that you see lasting 1 year, 4 years, 10 years? How do you view this particular bull market, relative to other mining stock bull markets?
That's a good question, but it obviously, requires us to speculate and guess, Bull markets in the past have traditionally lasted years. There have been some spikes in the past, even going back into the 70s and early 80s, there was like a 4 month spike. In 2016, there was a 6 month spike, but those weren't really bull markets per se. If you're going to measure just bull markets, they last years. And we're a year and a half into gold, less than a year into mining stocks. So we've got a ways to go. Uh, what the question for me is, Gary, is does this end in a mania?
Yeah,
The interest is growing, and we don't really have a lot of the mainstream and Wall Street investors in our sector yet.
not at all.
When they come in, that's going to get a lot of fun. So that's why I've been saying, hey, some of the easy money's been made, but the big money is still ahead, and that's why.
Yeah, that's exciting. So you mentioned earlier that gold, had hit the high in mid-April. It's been consolidating ever since. Why haven't we seen much in the way of corrections to the metal? And is that a strong indication for what's coming?
That's a good question. I asked that myself. I went back and did a chart, and I charted all the corrections and all the surges in the gold price since the bull market started. So over the past year and a half, there's not been a correction in the gold price of greater than 6%. That's it. And the average from 2001 to 2011, that full run there was 12%. If you take out the 2008 crash, it's still 10%. That was the average. We haven't hit even that average yet. We've only hit 6%. And the gold price hasn't really corrected furthermore since it hit that high last April. It's been trading in a range. A lot of people, myself, thinking, okay, it's probably going to go back to 3,000. We haven't seen that at all. So all of this tells me there's a lot of strength in the bull market. There's a lot of interest. There's a lot of demand. And even though the mainstream investor is not in gold stocks, they're still in gold, and that is supporting the price along with central bank buying and all that. So this really is a strong signal that this is a very strong and healthy bull market. Now, how long it goes, we don't know. There probably will be a big correction at some point, but for me, that'll just be a buying opportunity.
I certainly hope that those who are turning in, if they, are not in the metal, I could see them not being in the miners at this point, but certainly not being in the metal. But if you're out of both, it's critically important for you to understand really what's happening here. The current is really moving strong in a very positive direction. And all you got to do is get that life raft into the current, and it's going to take you.
Yeah, you could think of it as a dam, and downriver, if they open the water, the open the gate, the water is flooding down, and that's what we have right now. Sometimes the gate will close and the current will be less, but they're going to have to open the gate again, and so we ride the wave and buy the dips. That's
Yeah.
the theme of how I've been handling this.
Yeah, it's wonderful. All right, so gold and silver mining stocks continue to hit fresh 14-year highs, yet the rise is almost completely unnoticed by the mainstream financial media. Imagine all the coverage any other sector of the market would get if it was up 80% in
Yeah.
2025. But
Yes.
you don't hear a peep that the mining stocks are up 80%, 77, 76%. What stage of the cycle would you say that the mining stocks are really in? And what inning is this bull run in based on that factor that the media is not even talking about it?
Yeah, you don't see GDX or GDXJ quoted in mainstream media, at least anything I watch. So they're not in there yet. Like I said, I think they're in gold to a certain extent. That's contributed to the demand and the rise in the price. But they're not in mining stocks. I think that is still ahead. So we're very early in this. I'm not saying it's going to last 20 years or whatever. I'm just saying there's a lot ahead because A, it's so young, and B, they haven't come into this sector yet. Um, I remember, Gary, in 2011, I think it was April, I was contacted by PBS for an interview about gold. And I thought, uh-oh, this could be near the top. PBS of all things contacting me for an interview, and gold peaked in May that year, and that was it. And so, I think that's kind of when the top comes, or maybe it's when Jennifer Aniston who is one of the most beautiful women in the world, calls somebody that looks like this to ask about mining stocks. Then we'll have the top. And I will tell you that will be the top of the market. Um, all that stuff is what happens at the end of a big bull run or in a mania or anything like that. We've not seen that at all.
No,
We have none of that.
it's interesting that you say that, and I'm not going to be jumping on the bandwagon regarding the face comment you just made, but around, but when the Lakers, they sold the rights to their stadium, to their stadium, and it became, I think, crypto.com arena
Oh,
a
yeah.
couple years ago. And so, maybe the top will be when we start seeing some sports franchises incorporating a gold miner or
Right.
gold into the name of the
Yeah.
stadium. Yeah.
I think it would be great. We may see that, but I will tell you when if that happens, Jeff Clark will be starting to sell.
Yeah, I understand that. All right. So, Jeff, while the prices of GDX and GDXJ, the ETFs, we've talked about this, they've been happening in a big way, up almost 80%. They've also been experiencing some outflows at the same time. The flows, I mean, it could be showing that investors want safe haven gold, but still distrust the miners, which would support all the other things we've been talking about so far, even though the miners are up 75 to 80%
Yeah,
year to date. But what's the message that you want to share with mining investors regarding this scenario where even though you know, even though the ETFs are rising, we're seeing some outflows this year?
the gold ETFs are rising and the mining ETFs are seeing outflows,
Yeah,
right?
yeah, yeah.
I have an opposite take on that. What I think it means is that investors don't want exposure so much to the indexes, but they want to jump into individual mining stocks. That is probably what is happening, in my opinion, my observation. We don't know that for sure. But this is reinforced by the financings that we see and just how much money is being poured into some of these. They're not all high quality companies, but many high quality companies. And I think that could be why. Why would I want to own GDX when I can come over here and buy three, four, five, or 10 mining stocks and get into the financings at a lower price and get a warrant with it? So I think that is probably what's happening.
Okay. So there is record margins that are being experienced by the producers. Mining equities continue to trade at a discount to spot gold. There's a valuation dislocation that has emerged from a combination of some investor skepticism and macro volatility. While physical gold continues to perform, major producers have not even fully re-rated, even though they're up big time. So analysts note that sector multiples remain below historical norms, even as this cash flow generation reaches incredible highs. How long does this gift to investors last?
Oh, that's the perfect way to put it. It is a gift. It's not too late. It is a gift. Someday it will be too late. We're not there yet. But I don't know how long that lasts, but I think it's another signal that uh, we don't have Main Street and Wall Street in our sector. And that's still ahead. So there's still an opportunity there. We can still get into some of the higher quality companies that you might want at a discount. And that's despite the move in some of these stocks that's been really good. So if you want producers, I'd start at the top and work your way down. In my opinion, that would be Agnico Eagle. That's the number one gold producer, large gold producer in our industry, in my opinion. But then just work your way down, and I think that's what we have ahead is a big push in demand for these stocks that gets them re-rated.
Yeah. All right. So, Jeff, the stability of all-in sustaining costs further reinforces the margin outlook for the producers. Tier one producers continue to report AISC near $1,200-$1,300 an ounce. It implies basically a margin buffer of more than 100% because the
Yeah.
price of the metal is like 3,500.
Another thing the mainstream media is missing, the margins, you know.
It's unbelievable. So the input costs, energy's been relatively stable, but energy, labor, consumables, they remain inflationary somewhat, but their impact has been more than offset by the pace of gold and its rise. So free cash flow yields, they're expanding as a result. Are miners really in the perfect storm right now? Have you ever seen this exact situation? It's really favorable for them. And how long do you foresee this setup lasting?
Well, the last time we had high inflation and a rising gold price was back in the 70s. You might remember just how bad inflation got then, the fight inflation buttons that people wore and all that stuff, and that Reagan tried to fight. Um, Even in that high inflationary environment, which was higher than what we've had here in the past few years, gold rose more. So, in a high inflationary environment, the margins of the producers actually rose. That's crazy to think about, but that's what happened, and that's what's happening now. Inflation has is still elevated, but it's somewhat stabilized. It's kind of plateaued a little bit, still rising, but the acceleration is kind of plateaued. While the gold price is up tremendously, a lot more. So all-in sustaining costs are higher now. They're up around 1,400, I think, for the average for the industry I read.
You
But the
know,
gold price is up much more in percentage terms. And so what we have is a situation where the producers of gold actually are seeing higher margins despite high inflation.
it's amazing, Jeff, is that for the last couple of years prior to the gold breakout, and then even after the gold breakout, but before the miners breakout, the those coming on to this show, I'm sure you were one of them, who was proclaiming the fiat debasement. There was no choice. They were debasing, the US dollar, and there was only one way for gold to move, and you need to jump on the train. And so many fought it. And here we are, and we're watching the miners go up 80% in 7 months or 6 months, and we're watching, gold getting ready to make another move, possibly starting next week. It looks like it might have broken through today. It's pretty exciting to see what's happening now compared to what the collective was talking about over the last 12 to 24 months.
Oh yeah, ever since, there was a COVID crash and then the COVID bounce, which lasted like 6, 7 months, which I participated in. That's another story that I did very well in the COVID bounce. But since then, late 2020 to now, until this year, miners and gold to a large extent really haven't moved. And it was frustrating for a lot of people. Why aren't these things moving? And I was asking the question myself. But now that has shifted. We have a clear signal that that has shifted. And so, despite, the uh, pessimism that was going on at the time amongst all of our community, uh, that has shifted, and now is the time to invest.
Yeah, it's exciting. Okay, so back to the miners. Their balance sheets are in a totally different place than they were at the end or from the middle to the end of the last bull market. There's been a very marked shift from that 2011, 2012 cycle where rising prices back then triggered aggressive expansion, cost inflation, ultimately equity destruction by the miners. It really left a bad taste in everybody's mouth. And that is it's still hung over even through the beginning of this bull market here. The current P&L restraint appears to be more widespread, more institutional. Many firms are responding to that investor pressure for capital discipline, drawing from all those past experiences. It seems to be a very different situation than 2011, 2012, when things came to an abrupt halt. What do you expect the impact to be because of this P&L discipline, the deeper that this bull market presses on?
It attracts more investors. That's the bottom line. But you're right. Back in 2010, 11, 12, the seniors, most producers went heavily into debt to expand and grow and all this. I don't know if they just thought it was going to last forever or what, but that's what they did. They took on a lot of debt. And you're exactly right. It left a bad taste in a lot of investors' mouths. And for years, they just went nowhere, and perhaps deservedly so. But that has since changed. They've cleaned up their balance sheets to a large extent for the most part. And what we have now is a situation where the net debt of the producers, net debt being a bit over debt, the net debt for the industry as a whole is projected to be this year zero. That's amazing. And
Mhm.
that has attracted a lot of investors back to the industry. I think there's less hesitancy to come back in because they've cleaned up their balance sheets. And a lot of the people that are running these companies now were, you know, in the industry back then. So they see what can happen when you run up the debt. So it really does portray a stronger industry on our part and a more attractive valuation setup for investors that want to come in.
If the majors capitalize on this margin expansion that they're experiencing and pay down more of their debt, do you expect that to bring goodwill down the chain to the juniors?
Yeah, that's traditionally how it happens. You know, there's money goes into the producers, then it trickles down to developers, then it goes to juniors, then the really early stage
I
opportunities.
guess what I'm asking though is if if the capital discipline, is really happening because of this margin expansion, if we see ongoing capital discipline here from the Agnicos and the Newmonts, et cetera, do you expect that goodwill to trickle down? And more people will want to pile into the space and go down the chain because they're seeing, well, look, even the top dogs, they're behaving the right way with the money that they're, being given.
Yeah, yeah, I think that'll trickle down. That's the traditional way things go. But what I think is happening right now is that the large investors, institutions, fund managers, and that they're more attracted to the producers right now because of that discipline. And yes, that'll trickle down if it already hasn't started. Um, but more than that, what I think is happening is that there are two or three factors or types of companies that are the most attractive and getting rewarded right now by investors. And that is discovery. Obviously, that's always the case. You make a discovery, your stock is going to go up. And the second one right now is production. It's the companies that are starting up a mine or entering production or building a mine or adding, doubling production or something like that. Anything around that um, is getting rewarded by investors right now. So I think that's where a lot of the focus has been for investors. And yes, it's going to trickle down to the juniors eventually.
So let's shift over to silver. Industrial demand for silver keeps climbing from 54.5% of mine supply in 2016 to over 80% in 2025. Silver has unmatched conductivity and versatility. It's second only to crude oil in applications. It powers EVs, solar panels, really just about everything in the electronic world. It's been in a supply deficit for 5 years now. Saudi Arabia just poured more than $1 billion into a silver ETF last week. The US just added silver to their strategic critical minerals list. Last September, Russia announced that they were purchasing and stockpiling silver. Silver really seems to be coming more into focus. The longer the debt and dollar debasement issues last, which they don't seem to have any end in sight, the higher gold goes, the more silver comes back into focus as a monetary metal or a little brother to gold as well. Is this environment around silver setting up for a potential short squeeze in the coming months or years?
Well, if by short squeeze you mean supply can't keep up with demand, there is a lot of above ground supply. So I'm not thinking there's going to be a supply demand issue, despite silver. being in a supply deficit, meaning annual production is not keeping up with annual demand. Um, what I think is more pertinent is what you mentioned is the monetary issue. I think most viewers know that when gold goes into a bull market, gold leads, silver lags, and that's what we've had to a large extent. So, but by the end of the bull market, silver outpaces gold and gains a greater percentage in terms of return before that bull market is over. So that's still ahead for silver. And I think, Gary, it's going to be partly because gold's pulling silver higher, but it's also going to be because of the uh, I lost my train of thought. Because of the monetary issues that you mentioned, there's going to be some type of monetary or financial or whatever issue like that that is going to ultimately drive investors deeper into silver and have it outperform before it's all over.
Yeah, I mean, that has been the track record of silver, and that's what most are expecting now. So, not now, but in this particular bull cycle.
Yeah.
So, Jeff, normally when metals perform well for a few years, producers ramp up output to capitalize on the favorable environment. That's not happening right now. Decades of underinvestment, you talked about it earlier, in the mining industry has been so severe that there are virtually no significant new mines coming online to meaningfully change the supply curve. Some think this problem is unique to silver. It's not. While the imbalance is more acute there, other metals face the same challenge, a shortage of new supply on the horizon. Because of this, do you believe that this metals and mining cycle is likely to last much longer than prior ones? And that's because the investment cycle was not as deep as previous ones?
That's a good point, and yes, I think so. If we can, make an educated guess at this, yes, I think that will make this cycle last a lot longer because the majors, seniors, they need ounces. All producers need ounces. If you produce 1 million a year, you got to replace or find 1 million ounces just to stay even. One thing I would note, though, is that a lot of mines have some low grade ore that they may have not been mining before, or may not have developed a deposit because it was low grade ore that are now financially viable, that are feasible. So we will see an uptick in supply because of that kind of factor, but it's not going to change the whole landscape of no new discoveries out there, at least no big ones. That's a structural issue that's going to take years to resolve. And because of that, I agree with you that yes, this mining cycle for stocks could be much bigger, much longer, especially given that we're just getting started.
Very interesting. Okay. Jeff, reserve life for the miners, it's a mounting concern. The average life across major producers has now declined below 10 years. The trend has strategic implications without significant new discoveries, like you were just mentioning, or consolidation from going down chain, down the trail. The industry could face gradual contraction in output, even as prices support higher activity. What's your expectation as far as aggregate reserve life and potential ramifications?
Yeah, that's a great point, Gary. I didn't know it was getting that low now for the industry. So I think that ties into everything we've been saying that this cycle could last longer because of that. One other implication I think, though, that's going to come out of that is an increase in M&A, mergers and acquisitions, and we're already seeing that. Um, some of these raises, that was the purpose of them, was to buy something else. The seniors and producers are going to need ounces, and they're probably more likely to buy them than to try to develop them, meaning organic growth within the company. We'll always have that. And the higher gold price incentivizes that, right? But it's still cheaper, I believe, for producers to buy the ounces right now, even though prices are up, than it is to try to develop them on their own. So I think another ramification of what you're asking is we're going to see a very healthy cycle in M&A. And of course, if you like to invest in juniors, you'll see some of those get bought out if you are into the high quality companies that a producer is going to want, that a senior is going to want. That's going to be critical. But I think that cycle is going to be fun for us.
To your point, I think there was a silver junior that was purchased last week. I'm struggling to remember the name, but one was taken off the board there. So yeah, I agree with you. I do think that we're going to see an uptick in M&A. Well, this has been an incredible discussion. I just want to welcome everyone who's tuning in to this fantastic interview with Jeff Clark, founder of the Mining Stock Advisory, Gold Advisor, and the author of the book Paydirt. Before we wrap up with Jeff, I want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community, receive a free report. It's titled, If You Don't Own Gold, You Know Neither History Nor Economics. That's a famous quote by investing legend Ray Dalio, and that's the name of the report. I'm also positive that you've been enjoying the conversation that we've been having. Please let Jeff know by hitting the like and subscribe button and leaving a comment below the video. Jeff, would you please share with everyone who's tuning in here to wrap up a key takeaway that you want the viewers to keep in mind about today's economic market, monetary situation? It could have something to do with the metal, the miners, whatever. And then let everyone know where they could learn more about your work and how they can connect with you.
There are no guarantees of what is going to happen with gold in the miners and also with the stock market and the bond market, geopolitics, finances, all of that. But there is a high conviction right now among many investors in our tiny little sector, of the mining stocks, especially the juniors, that they are investing heavily right now. We have a confirmed bull market that is evidenced by the fact that GDXJ has risen more than GDX. GDX has risen more than gold. That those are the exact ingredients of a bull market. We have that. I am personally investing very aggressively. I have been all year, probably more aggressively than I ever have. So I'm not telling you I'm going to be right, but I have a high conviction, and that is what I am personally doing, and my money is definitely where my mouth is.
Okay, that's exciting.
So
Yeah,
if
but
you
let everybody know where they could learn more about your work and how they can connect with you.
Sure. Everything's under thegoldadvisor.com. You'll find everything there. We have free newsletters you can subscribe to, both in gold and silver. We have paid newsletters you can subscribe to. They're not very expensive, I'll point out, especially relative to our competitors. We both have books. If you don't know, Peter Kraut came over. He's our silver guru. Came over when we acquired Gwen Preston's business last year. So he does all things silver. He has a free letter, a paid letter. He has a book as well that's also on the site. Both books are pretty inexpensive if you want to check them out. But my book, Paydirt, is exactly my answer to someone asking the question, well, why did you pick this stock and why did you not pick that stock? It's the method I've used in the past successfully. There are 17 other people in the book I interviewed as well, all the way from the Rick Rules of the world down to geologists you've never heard of, giving their input and their advice on how they pick a stock or what they look for in a company. Not pushing the book, but you can read a free chapter on the website there and see if it's something for you. But be warned if you're claustrophobic, it's the scariest mine I've been in, so you've been warned. So, but everything is there, and hope to see some of you join us. If you like to speculate in mining stocks, now is the time to do it, and we are being very aggressive right now.
Wonderful. Now, are you also on X?
Yeah, I'm on Twitter at the Gold Advisor. I'm on LinkedIn a little bit, but I personally don't spend a lot of time there. I'm spending a lot of my time evaluating and tracking mining stocks. So
Okay. All right. Well, I'll have all of that information up on the screen. It'll also be in the description area. Everybody can click through, get over to you, Jeff, and check out your work, learn more about your company, learn more about this bull market that we're in. It's a very exciting time, and I really appreciate the picture that you've painted for everybody today. Jeff, thanks again for coming on to Metals and Miners, for being so generous with your time, your analysis, and ideas. It was wonderful to see you in Boca. It's wonderful to spend this time with you here. I look forward to having you back on sometime soon. And everybody else, thank you for watching.
Thanks for having me, Gary. We'll do it again soon.
Before we wrap up with Jeff, I want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community, receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report.